It's David Moore and Robert Smith here today, and we're going to talk a little bit about mini storage. And I think we got to start off by saying, once again, doors. I was taught doors. You wanted diversification. So, okay, you got 4 rental houses, you got 4 yards, 4 roofs, everything else. You get 1 apartment building, 4-plex. You got 1 roof, 4 walls, 1 yard. So you always had that economy of scale going up with the stuff, but the doors gave you the diversification. It was sort of interesting last week, as I said, had a presentation by Patrick Berry for the CCIM and talking about the apartment updates and what was going on. And I always think apartments with doors, right? But somebody was talking about, I don't want to deal with, talking about rent control, and say, I don't want to deal with the doors. I'm going to go, I deal with retail. I said, that's a lot easier right now, retail. So if we're looking at some of the doors or quote unquote doors without having maybe to deal with people, that mini storage comes in. Otherwise, we're talking senior living, we're talking apartments, mobile home parks, probably those things. But why don't you talk a little bit about mini storage and why mini storage, why today?
Well, it's not just why mini storage today. Self-storage has been the number one commercial property type from a total return standpoint at 16.8% annualized for the last 20 years. So it has been, continues to be the number one commercial property type in terms of total return. Why today? Why we think that's particularly important today is in light of the possibility of national rent control. Again, you want diversification, you want multiple doors, but all other things being equal, you would like multiple doors without tenants because tenants vote and junk doesn't. So the political class is
junk votes.
Junk. Okay, yeah. But it is at least heretofore. It's not as a asset type. It's not on the radar screen from a regulatory standpoint. As a matter of fact, the only regulatory attention that's being currently paid to it on a municipal level tends to be very positive from a supply and demand standpoint, because self-storage is the least profitable type. Not profitable. It's the lowest value add type of development there is, because it's a cement slab, it's an empty box, there can be climate control. So from a development standpoint, it can be the least desirable asset type from a municipal tax standpoint, because what little bare land you may have in municipalities, in urban areas, they would much rather see that develop to an apartment building, a hotel, something with much, much more added value, because that generates ultimately much more tax revenue for city coffers, state and city coffers. And so there are many municipalities now that are starting to pass measures to prohibit self-storage development because they want that land dedicated to a higher use. And so whether you like it or not, self-storage is demographically driven, and we haven't mentioned this before, but it's following, self-storage is following the millennials out from the city into the suburbs. 10 years ago, all the millennials living downtown, single, nightlife, wanting to have a good time. Fast forward 10 plus years, they're now migrating to the suburbs because they want to raise families and create households. They're finding housing very difficult to get and very expensive, and as rates continue to go up, it will get more expensive. So that means when they buy, they're probably going to buy down something smaller. So more people, smaller space equals greater demand for self-storage. So storage isn't something just kind of out here orbiting by itself. It's actually tied to the movement of millennials to the suburbs and ultimately the growth of their families. And so there is a demographic component to demand, just like senior living. We like senior living very much as an asset class because, like it or not, whether the economy's up, down, or sideways, every year we all get a little bit older, and so there is an inexorability to that demand increase. I think you can say the same thing about storage, and so we think it's a very desirable asset class because whether the economy's up, down, or sideways, those millennials are going to continue to move out to the burbs, try to create families, and more people, more stuff, it should translate into more demand for storage. So we like that inevitability.
Well, I'm sitting here listening to you, and I'm thinking, gee, I've got a mini storage. Forgot it was there. I don't own it. I'm just paying for it, right? Yeah. It's like you think about the number of people that just store $500 worth of stuff in a mini storage that costs them $100 a month for years.
Right.
And I mean, it's pretty interesting. I want to talk a little George Carlin, right? I mean, the old thing with SHIT and stuff, right? I mean, it's like okay, garage sales where your shit becomes other people's stuff, but it's mini storage. Like you put stuff away, you forget it's there.
Buddy, once you move it into storage, it's probably going to be until death do us part. It ain't moving out. Okay, it's just not that it's. The manifest inconvenience of going and getting all that stuff and moving it out, and your wife doesn't want it in the house, your kids don't want it, and you're not dead yet, so you don't want to throw it away. You're just not going to do it. Yeah. You're going to leave it there.
So if we're talking about mini storage, I mean, obviously we all drive down the road and you've got projects all different sizes, but you made a comment earlier about the sort of the demographic of the typical mini storage owner. Right now it's primarily privately owned, you said?
It's actually, and therein, thank you for bringing that up, therein lies another, we think, a very strong reason to invest in self-storage. 81% of self-storage nationwide is still owned by mom and pops. Only or less than 20% of self-storage units are owned nationally by the 5 big publicly traded companies. Self-storage, can't remember what the name of the number 2 company is. Actually, self-storage just tendered an offer to buy the number 2 company out. But the fact that 80% of it is still owned by mom and pops tells you that the majority of the industry it's not been rationalized from an ownership standpoint. So it is still run inefficiently at greater than should be cost. So therein lies the opportunity in terms of increase in value by aggregating these assets in some type of institutional ownership format to improve the efficiency of management, decrease cost, and increase profitability. So it's one of the last commercial property types left in the United States where the vast majority of it is still owned by mom and pops. Good question.
But it is probably, I shouldn't say but, right? It should say and. The barrier entry, though, I mean, so typically that first investment property, like we've discussed many times, is a rental house, and they sort of snowball it, another one, and then they go to doors and whatever's going to happen over time. But I mean, if we look at people, just that the economy of scale, once again, in a mini storage, you're going to want some size that's got some critical mass and security and all that stuff, and probably that floor is potentially out of reach for a lot of investors that might like to branch into that.
Yes.
And so from that DST space, you obviously are experiencing a lot more interest in it, or is this something that you think your investors should be more interested in? They haven't really thought of. I mean, are you seeing an increase in demand on this?
There's a very strong increase in demand for the product on an institutional basis, meaning that coming out, self-storage enjoyed stronger tailwinds than any other property type from the pandemic. because I mentioned earlier, the demand drivers, death, divorce, downsizing, dislocation, and the pandemic was a world-class dislocation event. And so it outperformed pretty much every other commercial property type out there. And then coming out of the pandemic, you have the immediate onset of inflation, and institutional investors just jumped on it like stink on you know what, because they see it as the ultimate inflation hedge, because the rent intervals are monthly, okay? And so assuming full occupancy, you have greater flexibility to increase rents more frequently with this asset class than any other commercial property type, which in turn hopefully will keep you ahead of inflation, not only from a cash flow standpoint, but also an appreciation standpoint. So the institutional guys have been all over it, gobbling it up. Their average aggregate purchase has gone from $50 million in the last year down to $15 million, which is...
So from 5.0 down to 1.5.
To 1.5.
Yeah.
And so the institutional guys now are actually competing with retail investors to buy this stuff. And that's why it's so hard as an individual retail investor to find a self-storage property yourself, because you're competing with the big boys. And because of their aggregation powers, they can buy at a higher number than you can and still make it work. So that's why therein lies the principal advantage of DST, is because you can get into self-storage as part or on an institutional platform, and otherwise it's going to be a difficult industry for retail investors to enter.
Floors is too high.
Floors, yes, you are correct. Yep.
Great. Yeah, I was actually going to ask you some of those numbers, but I didn't want to do it on camera before I'd actually had a chance to discuss it. And ye of little faith, I should have known my buddy Bob would have all those numbers in that noggin of his. But once again, David Moore, Equity Advantage, and Robert Smith, Peregrine Private Capital. We'll be right back.